Alright guys, welcome back to this new live trade. Today I'm only trading London session because I don't have time later. And as you can see, I'm already in this trade here. I shorted NQ today, and I'm going to explain you why I took this trade. I think at first it's just better to let this play out because I don't really want to explain this while the trade is still running. And as you can see, this is not on Top Step today. I decided to buy another Tradify account, so you can see here. It's a live Lightning funded, so this was a straight to funded. There was no combine or no challenge. They are a bit expensive, but I can really recommend them because I think the price is still fair. And the problem is I'm only allowed to make $600 a day because of the consistency rule. So that's the reason why the position size is so low. And I think I'm waiting for NQ sweeping this low here, but the idea was really simple. So we had this high here. I was waiting for NQ to sweep this high here, and then it was just a combination of PO3 and standard deviation, and then I was just waiting for the first market structure shift, and then I pressed the short button, and that's it. I think I can already start explaining a little bit. So what I really liked was, at first we had also SMT here, so you can see we have the hourly chart here. And ES, this red candle here is the currently red candle, and this candle here failed to sweep the previous hourly high, but here on NQ it did. So you can see here it swept the high here, and this is what I want to see. This is how I use PO3. That's what I'm interested in. Also, what made me bearish, of course, we had a really strong sell-off yesterday, so I think there is no reason to go long until we swap this low here. That's step number, aspect number 2. And also we created in the previous 4-hour candle already a swing. I think most of you guys know this already. I'm always looking for swings. This is the hourly chart, this is the 4-hour chart. You can see we had this candle here, and then the next 4-hour candle here swept this high here, and closed below this high here. So that's also a valid swing. And what we do is, when this candle here creates a swing, we are expecting the next 4-hour candle to, this is a bearish swing, so we are expecting the next 4-hour candle to sell down. So that was the PO3 part in this trade here, but I think now that's the most important part, standard deviation, and also I think I'm going to explain this. Okay, just want to let this trade play out. We are really close to hit my TP. Okay, and it looks like ES is a bit stronger here. Okay, I hope that does not take too long. Okay. So today, actually, I think, it was this low here. It was like this. So I decided to, So today I decided to take this high here. I know it's almost not even visible. Most people would use this high here, but where I'm using standard deviation, and that's how you perfectly top and bottom tick reversals. So what I do is I'm looking for alignment. So of course I teach you guys already that standard deviation works the best when you use the last manipulation high that caused this low here. So normally it would be like this, and that's 100% right. Okay, now we are getting the winner. Yes. Okay, perfect. Thanks for this. Okay, now I can explain a bit better. I think I'm also switching just on NQ. That's enough. So most people would use it like this, and that's completely true, but I'm always looking for alignment. So this zone here, this is the first zone where I participate. This is way too high, and also the -4 is just unrealistic. So I was looking, okay, can I use the standard deviation tool on a high that is in alignment with this zone here, because you can see we had a lot of highs here, so there's a lot of liquidity. So I was doing it like this here, because when we're really strict, this high here was the last high that caused this low here. So this was our manipulation range. I'm going to mark this out in red. And what we are trying to find is any highs or fair value gaps in this area here around the -2, -2.5 level here that can lead to a reversal. So we had a lot of highs here. I'm just going to mark this out. And that's what we're looking for. So we had highs here, resting liquidity, and in this reversal zone here. And yeah, if you don't understand this, just watch my video about standard deviation. So I'm just trying to explain this quickly. We are trying to predict future price levels where price could reverse. And we have two different zones. We have the -4 zone and the zone between -2.5 and -2. And yeah, today I choose this zone here, yeah, because it was in alignment with these highs here. And then that's the last thing we want to do is, yeah, just wait for the first market structure shift. So here was no market structure shift, but you can see here we had here an inversion prevail gap, and then we closed below. So I decided to take this short here, like this, and then I was just targeting this low here. I think my entry was a bit worse. It was somewhere here, but that's totally fine. So yeah, I think I was risking $100 for making 500, and yeah, this is literally how it works. And what you can also do, and this is what we do, we measure a potential reversal zone with standard deviation, but we also measure potential targets with standard deviation. You can see here, okay, today it did not work perfectly. So yeah, but my target was here this low. If you want to do this, you can target -4, but it's stupid in my opinion, because yeah, we can also reverse from sweeping this low here. So I think I was totally fine getting out here. And yeah, if you have any questions about this, just let me know, and yeah, see you next time.